What's going on, guys? Wix back, and today we had a brand new video with Jerome Powell and the Federal Reserve bailing the stock market out and giving us a green day with only a 75 basis point hike and calling off the recession. So in reality, we are definitely in a recession, at least a technical recession, even though they want to change the definition of recession to make it fit something else so that they can say we're not in one, but we're definitely technically in one. We're going to get those numbers soon. But the 0.75% basis hike that we got actually was very good for the market. We saw the market end up green today, and because the market was waiting for the 100 basis point or 1% hike, that was the big worry that was going on. We can see just from this was the breaking news. It came out today. The Federal Reserve hiked rates by 75 basis points, and it was a 12-0 vote. So universally voted for. No one turned against it, which maybe I guess is a good thing. If somebody wanted 100 basis points, they would have voted against this. So maybe it means, they're on the same page and higher rate hikes aren't on the horizon, which would be good for the market. We can see the S&P is changing its kind of course here, where we saw earlier in the year was kind of the drop, and every rally was followed by a drop that went lower. And we saw this rally dropped lower, rally dropped lower. But if we zoom in here, recently we had this smaller kind of move up and it didn't drop lower, just kind of traded sideways here for a bit with a larger move up and started to drop based on all of the earnings from things like Google, Microsoft, worrying about that, but they actually weren't bad earnings. And then the basis point hike, which we got, was better than expected, or at least wasn't the worst case scenario, sent the market flying back up. So maybe we saw a bottom here, and we saw bottomed at like 332 for VOO and the S&P. If we see that, and now we just start this move up, it's very possible that we've been in this recession for 6 months. That we would get an official technical recession when the GDP comes out negative again, which would be 2 consecutive quarters, which would be 6 months, and the average recession lasts 6 to 18 months. So the market and investors would be preparing to be on that back half of recession, of getting out of recession and no longer having such bad kind of economics and economy going on, and the Federal Reserve pivoting to lowering rates, quantitative easing, and flushing the system with money again. It's something that could very easily happen. So all of those together could point to a bottom in the stock market, in the S&P, and we see lots and lots of green. Barely only things red are Snapchat, which had terrible earnings, and people were worried about the Google advertising, Facebook advertising, and shocker, they didn't get affected by Snapchat having bad ads. The ads went to the big guys. So nothing really crazy there, but only thing red, Snapchat, which probably deserves to be, and then market volatility. But if we look at this federal funds rate, we could actually see something here where we see this kind of where we started going up, where we had the rate cuts to zero, held zero for a year or two, and now we're coming up. But if we look at the overall kind of trend here, we never break the previous peak in rates. So we see right here, didn't break previous peaks, falling down again, didn't break it again, fell down, went sideways here, but still not breaking it. This peak, not breaking this, and moving down again, not breaking it, and then down to basically zero in 2008, the financial crisis, 2009, and holding that for a while, going up to 2.5. Didn't break this at 5, but now we're kind of seeing a reverse of that, where we might be breaking this pattern where we know it's like, we'll just call it 2.5 to make it easy. Went from 2.5, cut to zero, and now we're coming back up. And the rate right now is 2.5. So 2.25 to 2.5. That's how they measure it. But right now, that would be basically the exact same rates that we had in 2019, which means, are we going to break this model? Are we going to go to something where we go higher than where we went before for the first time in 40 plus years? Or are we going to break down and kind of get to where we were last time and start quantitative easing, start lowering the interest rates? Because hiking into a recession is not a good thing. That can cause massive problems and massive pain for everyone involved. Nobody wants that. So there could be a lot of pressure to lower rates, to flood money, to try and relieve some of the pressure. Or if we keep hiking rates, maybe something breaks and then we lower rates again. But we could hike up to 3% and see if something breaks in the financial system. and that'll cause, massive pain for a lot of people. But then, we get our answer and we probably get rates cut back to zero. Then we can look at some of the things Jerome Powell said during this meeting, just kind of key points here, saying that no one can be certain that we will achieve a soft landing. Not a good thing to say. What did we see? Everything leading up to this was we're aiming for a soft landing. We're trying to get a soft landing. We're going to have a soft landing. And then now they're saying, well, no soft landing. Don't get your hopes up. So that's not good news. It's kind of like the transitory inflation we saw, or inflation was transitory, and it went from, well, guys, it's not transitory. And now we're having, don't worry, we're having a soft landing, transitioning to, you know what? What is a soft landing really? So we're seeing lots of things flip, and it's never good to see that. So with this happening, we probably have a massively bad landing coming and probably a painful recession on the way. Also goes on to say, I do not think the U.S. is currently in a recession. I mean, come on. I don't know how you can say this. We literally have. We're going to get the second quarter of negative GDP growth. It's going to happen. I think the data comes out tomorrow. It's going to happen. We're going to see it. And they're going to say, well, that's not the definition anymore. We changed it. And it's just so ridiculous. So, I mean, how people in economics can be so wrong all the time is a mystery to me, because we know when they flooded the system with money, all the regular people on Twitter, like me and you, were on there saying, this is kind of crazy. This can cause massive inflation. This is going to be bad. And the professional economists that get paid to do this were saying, no inflation will come from this. It's going to be great. And then we get hammered with massive inflation. And then they flip the script and say, well, no one could have saw this coming, when every single pleb on Twitter was saying, I think this is going to cause problems. And they were the only people saying anything. So I don't know, how much validity can you put into the things that the Federal Reserve and economists are saying when they can't get the simple things of printing massive amounts of money is going to lead to inflation? How can you not put that together? And this meme actually right here does it pretty well, saying first, QE won't cause inflation, and some inflation, but it's transitory. Okay, high inflation, but we're peaking, and then it went higher. Okay, inflation, maybe not transitory, but job market and wage growth, very strong. Need to hike aggressively to curb inflation, but no worries, the economy is very strong. Soft landing possible. Negative growth GDP in Q1, no recession risk. Okay, recession is coming, but you will not lose your home. Okay, you may lose your home, but you won't starve to death. You may die, but you go to heaven. So a lot of it just seems to be tumbling out of control. Every single thing that they say, it's like the next quarter, they're saying, well, we were wrong. But at least you don't have to worry about this, and try and divert your attention. But it does seem, at least data-wise, maybe inflation did peak. If it's still going up, that's very, very bad compounding inflation, and that's going to even be way more problems. And talking about inflation, we could be in for way more problems, because Powell said further inflation surprises could be in store. Why? So they're basically saying, guys, inflation could still go higher. Double-digit inflation could be on the horizon, and why aren't you trying to stop that? It's like their entire job is to stop it. The 0.75 basis point hike, or the 75 basis point hike, was nothing. I mean, we all know inflation's at 10% right now, 9.1 for the last CPI reading. And if you want to get above that, you got to get the rates above 9% to try and bring down inflation. But we do know the massive amounts of debt, they don't mind the inflation because it makes the massive debt less expensive. So two sides to this. So for now, for the short term, the stock market is bailed out, gets a better than expected kind of action from the Fed. Instead of a 1% basis point hike, they got a 100 basis point hike. They got a 75 basis point hike, less than expected. Market really liked it, and it was a universal vote. It was 12-0, so that's everyone agreed. No one thought they should have gone higher. So who knows? Maybe the Fed is going to be U-turning soon, but with inflation the way it is, they'll probably just change the definition of inflation to something that's actually good for you, and change how the reading's done so that the number on CPI goes down. but real inflation still happening. But only time will tell what goes on. The stock market, everything reacting pretty good to this news right now, but long term, what are the implications? How much worse can it get? And with quantitative easing back on the table for the Fed, could it be flipping to quantitative easing, or is it going to break that cycle of not going above the previous peak? Who knows? So that's gonna do it for this video, guys. As always, don't forget to smash the like button and subscribe. We're on the road to 1,000 subscribers. I'll see you guys in my next video.